probably the most important thing we can do as traders, and it's the hardest thing too. And it's very simply this: stick with, right, the process. So now that presumes that right now you have a process, and I'm going to presume to some degree that's true. So then we think about what a process really is. A process is something that's going to allow us to see an objective trigger for an entry. A process is going to give us a formula. I think that's really important for not only position sizing, so position size, but also our stop loss or our risk. A process is also going to be very much an objective way to find our targets. And then probably the one thing that's most important about a process is it is time tested. Now, what is not time tested? Hey, this worked for me the last week. Hey, this worked for me the last month. Hey, this worked for me over summer or over spring or over fall, right? So you might say, Rog, that might be 3 months. Is that enough? Not even close. That's half of what I would consider time tested, right? Time tested needs to be 6 months at minimum, right? And preferably a year. So you can go through lots of seasons, lots of yearly, annual, this rhythm that we tend to get. Once something tests well for a year, you have a process. And that's something that a lot of traders struggle with. The other thing is, Rob, do you backtest? I never backtest. I'm not a believer in backtesting. Backtesting is, well, going back with no emotion, no reality of liquidity, no reality of open interest, usually, right? I don't believe in backtesting. So when I talk about 1 year of testing, I mean, if I'm going to start on Jan 1, trying to figure something out, I'm not going to stop until 6 months later, or preferably 1 year later. And that's forward testing, day by day, trade by trade. It could be a small amount. It could be 1 contract at a time. It could be 2 contracts at a time. It could be a small account test, but it's got to be, and I also believe it's got to be a real money test. But the other part of this is, you might say, Rog, if I don't have a process, how can I real money test? Well, then you real money paper trade. You write down the fill. You look at the open interest. So I believe there's a lot of, if you're going to do another way of testing and you're not ready for even a small amount of real money, then fine, paper trade. But that's tough because there's a huge part of just sort of the honor system, even with yourself, not deluding yourself. And here's really the best part. Try to disprove, try to break your theory, your hypothesis, your trigger, your indicator. Try to break it. Try to disprove it. Now, I bring that up on the backdrop of this trade alert recap that's sitting on top of the screen because this is what we're in right now as of Tuesday, October 22nd. And I'll show you what we've done this month as well. We have a saying in the room, we're going to recap everything, every entry, every exit, every day. And so these are the alerts that go out. So these are the swing trades that we take. Overnight positions, preferably following a trend. We're in NVIDIA right now, which you can see is going to expire on October 25. We're in PayPal right now, which you see is going to expire November 15. And we're in gold. Now, all of these, and here's a really cool thing. If you've got a watch list of things that are working, right, SPY, keep this on your watch list unless the structure has changed. So in a lot of these situations, I'd be willing to get back in if the trend is still intact and pulls back to zones that I want to buy from. This week closed on Monday. So this is going to be off the list today. And then these are going to be the 3 entries that we're managing into the week. Now, if we go down to this list, this is a quick list where all the closed trades that I alerted out to the Sector Secrets Mastery members are listed here. And I want to mention something. The beginning of the year, beginning of the month, was pretty bumpy. Yeah, we had a couple really nice wins, like in gold. We took something to 395 to 625, closed it at a decent gain. Right? We had some decent trades. XLY took it for about $1, but we had some losses too. We had some even though there's an XLI here, 260 to 723, I want you to see that we had some losses. And the early part of this month was pretty tricky. And then we had the breakout and some of you might remember, I had a video that says this move changes everything. And the S&P finally broke out of that narrow range, and we've seen a lot better follow through from about mid-month since. So yeah, we had actually more losers than winners the first half of the month. We're going to end up, at least the end of this week for sure, up. And that's because our losses were small. Notice not one was taken at a max debit, right? So if you're not seeing this level of transparency, right, this is the level that you have to get, you have to see, you should expect every trade, every entry, every exit, every day. So this is where we are now. Now, the cool thing about this is that each one of these has already had, and this is so important, the T1 scale out, which means we're operating all of these at worst from a break even. So we're locking in some profit, on a T2, but we're protecting risk here on PayPal and GLD because we hit the T1. So that's really pretty much where we're going to be as we wrap up this week in just a handful of days. Because if everything, for example, were just to come back around and head lower, these are all protected from further downside, barring any kind of gap. All right, so that's why I say we're definitely seeing a very nice upswing since the S&P broke out. So let's start with that S&P. Rog, what else could we do with this month? It's been a pretty good second half of the month. So what else can we do? I would still continue to focus on the long side of the S&P. I would actually also add the financials into the mix. XLF, the major part of the earnings, is out of our way, right? It's out of our way. So now what we can do is start asking ourselves, the S&P is strong. XLK, XLF, and XLV should be a part of that, to some degree, a part of that conversation. So if I take a look at XLK right here, let's open this up and let me move the clock over. All right. And I'm recording this 15 minutes before the bell. XLK, decent trend, but what stocks within the XLK make sense to keep an eye on? Well, we have and had positions in two. NVIDIA we have open. We just closed out Cisco. You would have seen that in the list. We just closed out the Cisco trade. Let's see. Right there. We bought the 50 calls that expired last Friday. Bought it at 245, finally closed it out at 620. Like I said, the second half of the month has been really good. I want to continue to focus on things like Cisco. I want to continue to focus on things like NVIDIA, which we have open right now. That was the one where you'll see on the current recap, we bought it for 430. We scaled out yesterday for the second target. I want up to 3 at 1120. So we want to continue to focus on that one as well. What else has good structure here? I would keep an eye on Salesforce and Oracle. Accenture doesn't usually have a ton of really good volatility, volume and open interest. That's going to have me just kind of pass on that one. Yeah, a couple stocks are having a good day, right? But what we want is something that's going to continue to follow through day after day after day. And this is where traders get hurt. They think this is important, and they'll overlook the bigger picture of follow through in stocks like NVIDIA and Cisco. Financials I mentioned, I definitely want to be focused on that. And XLF should be a big part of why the S&P continues to move higher apart from technology. And that's going to have us look at a handful of names here. It's probably easier to eliminate the ones we don't want to look at. Berkshire, thank you, but not interested. I would say also I'd keep Chubb on the back burner. Not really interested, but and I would say Visa is a maybe, but what is a yes? JP Morgan. Watch the open interest in MasterCard, Bank of America, Wells, Goldman. Watch the open interest in American Express, right? There are a number of things. And then Citi. These are all names that we want to continue to focus on. So trade this, not that is a big part of the process. Find the relative outperforming stocks in the relative outperforming sectors that are part of those indices that are moving higher. And that's where the continuation and the account growth is going to come, gang. Stick with the process. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.